Hello and welcome to The Trade. We are going to join Chris Weston from Pepperstone shortly, but before we get to the charts, a quick look at what traders are watching out there. And the number of Americans on jobless benefits surged between mid-September and mid-October, suggesting an elevated unemployment rate in October as an uncertain economic environment discouraged hiring. This comes as a divided US Federal Reserve began receiving updated economic reports, with policymakers looking for clarity in their debate over whether to cut interest rates when they meet next month. Fed Vice Chair Philip Jefferson has said the central bank should go slowly. Meanwhile, Fed Governor Christopher Waller says he's not worried about inflation accelerating. His focus is on the labour market after months of weakening. And President Trump indicated his administration has begun interviewing for the next Federal Reserve chair. I believe he told Bloomberg he already has his pick. US Treasury yields fell as a weaker stock market boosts demand for the safe haven bonds. The US 2-year yield down to 3.58%, the 10-year around 4.1%, and the US dollar reaching a 10-month high against the yen, the Aussie dollar there at 65 US cents. Let's get into the technicals and join Chris Weston from Pepperstone. Good to see you, Chris. It is all about those Nvidia expectations.
Yeah, absolutely. I mean, the stock has had a bit of a decline, about 15% pullback into the earnings, which I guess is somewhat positive because the bar has been pulled back a little bit, but it's still elevated. We always expect Nvidia to beat and raise, as you can see there. Yeah, we have pulled back and we're sort of coming into big support levels. I'm not sure how much those support levels really mean when we're going to get earnings coming through, and obviously that's a material shock to the system which needs to be priced in. And so, but you can see that we are coming down into those big horizontal support levels, and that may be symbolic of where we are at the moment with just sort of people cutting back on a lot of this AI winning exposure. But yeah, look, I mean, the market is expecting, if you look at options pricing, the one-day implied move in Nvidia is for a move up or down of 6.5%, which is kind of in fitting with what we've been really seeing over the last 8 quarters, where the average absolute move on the day of reporting is about just over 6% as well. So yeah, absolutely. I mean, the stock is expected to move, and if that 6.5% move is realised, then realistically that would impact S&P futures after hours by about 0.5%, all things being equal, and other stocks moving, and Nasdaq futures a little bit more. So obviously this is something that we are watching, but it will bring in other stocks as well. In the after hours session, if Nvidia was to move 6.5%, as I say, is what's being priced. Obviously it brings in the other realm of semis. It brings in Broadcom, Marvell. It brings in advanced micro and those kind of factors as well. So it could have a big impact on what's going on now. What are we specifically looking at to sort of resonate on that chart and see if we can get a sort of sell the rumor type thing? Realistically, what you want to look at is probably more importantly is sales and margins. The valuation of these stocks are generally dictated to by the trajectory of margins and absolute margin levels. And so I think gross margins are expected to come out at 73.6%, which is kind of like in line with what they guided to in the prior reporting season. And then the Nvidia are expected to guide to about 74.6% for those Q4 numbers the following quarter. So I think that's one factor. In terms of sales, this is a hard one to gauge because the analysts out there sort of see sort of a median projection of $55.18 billion. I would expect the buy side funds, the hedge funds out there, probably positioned a little bit more, and so that's where the bar is. I think you probably need to see $56.5 billion to please those expectations, and then the guidance for the upcoming quarter is expected to be around sort of 62 billion. So I think something in line, maybe 62.5 billion, 63 billion will get it done. But they're probably the key metrics that I'm looking for in terms of the numbers tonight. Obviously, straight after that, Jensen Huang will be speaking, and we know he's going to be positive. He's one of the most charismatic CEOs out there, and he's always very, very upbeat on the stock, and rightly so. But I think there's a number of factors that we want to look at, and first one is really going to be their $100 billion investment into OpenAI. There's so much consideration around how OpenAI is tracking at the moment, and an update on that would certainly be gratefully received. In GTC recently, Huang talked about this idea that they were looking to sell 14 million additional GPUs across calendar 25-26. they've already sold 6 million, so there's another 14 million to go. So an update on that, because that has a material upside boost to revenue projections going forward, the efficiencies, are they seeing any constraints coming through? And of course, the other factor as well, which I think is a major talking point, is the data center build out that's taking place, and this idea that by 2028 we could see a power or energy deficiency, or deficit, should I say, because of the consumption that these data centers use in terms of energy. There's obviously a big concern about the cost of electricity, the cost of power, and how they're going to generate the sort of power to keep up with the expansion in data centers going forward by that time. So I think all those things will come up.
So Chris, then what does that mean for the broader S&P 500, particularly when we look at where it's moved since October?
Well, sentiment does seem to be a bit downbeat at the moment. Obviously, I think a lot of people have come back and cut back on winning positions, core portfolio holdings. So you're talking about the AI beneficiaries, the winners. Quantum computers have been smashed. That's been a big thematic. AI power generation as a thematic has been hit pretty hard. Retail trader favorites, the Mag 7, they've all been sold. So people have just been trimming some of that core winning positions and maybe looking to ride it out a little bit. People have been buying volatility with the VIX at 25%. Realised volatility's come up, so that's come up. So I think it's an interesting one, because if you look at the technicals, again, it's similar to sort of the Nvidia trade, and given that's 8% of the market, you would expect Nvidia to be down and the S&P to sort of correlate quite nicely with that. But I think what's important here, if you look at the chart, we've got a lot of players out there that are dictated to by the flow and the price action and the overall trend and momentum in the market. So you've got the CTAs, the commodity trading advisors, who don't really care about price earnings ratios or earnings growth. They just care that the market's going up or down, and if the market's going down and it triggers their exit levels, they will cut back on S&P futures, Nasdaq futures, Nvidia underlying stocks. So if we break through these big significant levels, and they're mostly driven by moving averages as such, a lot of these players will have to take profits and cut back on that core long position. And as volatility rises, then you've got these whole dynamic funds who target a specific level of standard deviation in the market, and they'll look to take money out of the market as well. They control billions and billions of dollars as long as risk parity. So there's a lot of these structural flows that are driven by the actual price of the index. So that's why we look at these technicals so much, because it just aggregates all the beliefs and behaviours in the markets. The flows, all supply and demand. But we also know that there's some big hitters out there that will have to take profits and cut back, and maybe even some aggressive shorts if the market's falling.
Hey Chris, almost out of time, but quick word on Bitcoin and its fall. Does that mean it's time to buy?
Well, we were sort of warming to long positions this morning. I mean, things like strategy, MicroStrategy, the old MicroStrategy, that's come back now to its price is in low of its net asset value. So that's a pretty constructive situation that tells you things have probably been pulled back. A lot of these alts have dropped 50, some of them 70% from the recent highs, and a lot of the leveraged long position has been completely flushed out. The short position has been added, and so I think we've got to a point where things could bounce. And if we were to see it rally, I think a lot of the leveraged short position would be cut up, and that would perpetuate the move up a little bit there. But God, sentiment's so broken now since October 10th that it takes a brave person to step in and buy and stand in front of this train. So, but I do see I do see the risk reward shifting a little bit now, given where we are, given the flush out of longs, where ETFs are, and these factors as well. So, but it does take a brave call, and I keep saying this quite a lot. Let other people do the hard work. If you're a trader, let other people do the hard work. Let them put in a base. Instead of buying the dip, buy the rip after the dip, and let the momentum take up. So that way you get a higher probability outcome in that situation.
Buy the rip, not the dip. All right, Chris, thanks as always. Chris Weston there from Pepperstone. That does it for this edition of The Trade. Be sure to join us next time.